live from San Francisco and New York. Welcome to our special coverage of the largest tech IPO in history, Facebook, the public network. Facebook is set to start trading tomorrow morning on the NASDAQ. The social network has priced its shares at $38 apiece, raising $16 billion, making it the biggest technology IPO ever and the second largest IPO in U.S. history. I'm Emily Chang in San Francisco. Anchoring our coverage in New York is our In the Loop anchor, Betty Lou. And our IPO Dream Team is standing by. Markets reporter Dom Chu is at the NASDAQ market site in New York City. Senior West Coast correspondent John Ehrlichman is outside Facebook headquarters in Menlo Park. And our editor-at-large, Corey Johnson, is in the newsroom with all the numbers. Let's start with John at Facebook. John, what's the latest down there? This hackathon getting ready to start in just a few hours.
Yeah, I mean, to some people, Emily, it just might seem weird that a company on the eve of its IPO tells employees, we're going to have a hackathon. But this is a very important part of the cultural story of Facebook. This is their 31st hackathon. These are all-night affairs. There's lots of Red Bull. There are DJs. And the only requirement is that you pick a subject matter that has nothing to do with what you do every day to get the creative juices flowing. And it's something that they're doing around the world as well.
So John, Zuck has made a real point of highlighting the hacker way throughout this IPO process, really, and it's a big part of that letter that's in the prospectus.
Absolutely. And on the one hand, it certainly is helpful with the credibility of all those programmers, coders out there, but also this is a great opportunity for him to differentiate himself as a CEO. When you hear the word hacker, you might think of scary computer junkies up to no good.
A holiday hack attack.
Fall victim to cyber attacks. You have hacker group Anonymous.
Mark Zuckerberg says he's tired of the trash talk. In his letter to potential shareholders, Zuckerberg says the vast majority of hackers I've met tend to be idealistic people who want to have a positive impact on the world. Facebook is famous for its hackathons, dating back to Zuckerberg's first employee hires while still a student at Harvard, as depicted in the film The Social Network.
It's 10 minutes to get root access to a Python web server, expose its SSL encryption, and then intercept all traffic over its secure ports. They're hacking!
Zuckerberg says some of Facebook's best ideas have come out of hackathons, from the company's attack plan for the mobile market to Facebook Timeline, just one of the tools Zuckerberg hopes will shake up the way the world works.
If you look at the structure of his letter, he basically says that the goal of Facebook is to change how we relate to our governments, change how we relate to businesses and brands, change how we relate to each other.
In Silicon Valley, creative companies have long championed the hacker mentality. Before building Apple, Steve Jobs and Steve Wozniak sold so-called blue boxes, bypassing the phone company to let people make free phone calls. And Yahoo, a company struggling as Facebook grows, has a history of hosting hack days to mine for fresh engineering talent. But by taking ownership of the hacking issue, longtime observers say Zuckerberg's following in the footsteps of other wealthy leaders like Steve Jobs, who continued to plow ahead after amassing their fortunes.
They continued because of a sense that they had a larger mission. I think this letter is Mark's attempt to declare that mission and to own it.
And one great example of how this benefits Facebook is the patent suit with Yahoo right now. Remember, Emily, when Yahoo sued Facebook, a lot of big players in Silicon Valley immediately came to Facebook's defense.
And Facebook just yesterday called for that patent suit to be dismissed. Another story we are closely following. Thanks so much, John. I'm going to send it back over to New York and my colleague Betty Lou. Betty?
Emily, thank you. Well, Facebook priced its shares, as we've been mentioning, at $38 each late this afternoon, and it's set to start trading on the NASDAQ tomorrow morning, 11 a.m. Eastern Time, under the ticker symbol FB. At the NASDAQ right now is Bloomberg's Dom Chu. And Dom, there's been some news now on Goldman Sachs and its involvement.
Yeah, that's right, Betty, because you heard John just talking about this idea of how it's benefiting Facebook and Facebook shareholders and stakeholders. Let's talk about Goldman Sachs, because it's one of the shareholders that's going to be offering shares in this IPO. Now, Goldman Sachs and all the funds that it helps manage owns in total about 66 million shares of Facebook. Now, they're going to sell around 29 million of those shares. That means they're going to make or reap or take in about $1.09 billion in this IPO. Goldman Sachs itself, for its own proprietary accounts, not the funds that it manages, but its own account, is going to sell about 6.2 million shares, meaning it could raise $235 million just for its own account. Now, this is all excluding this green shoe option, this option that underwriters have to take on more shares and sell more shares of Facebook if the demand is there. If that green shoe is exercised, Goldman Sachs and its funds could sell another 4.3 million shares at $38 apiece, and Goldman itself could raise another $35 million. So when we're talking about the idea that there are selling shareholders here, Goldman Sachs, certainly not one of the biggest ones in the group, but one that's garnering a lot of headlines, Betty, because, yes, it is going to make money not just for its funds that it manages, but for its own account as well, Betty.
Still going to reap a profit no matter what. And Dom, just talking to some of the people down there at the NASDAQ, I mean, has anyone said what they think is going to happen to the stock tomorrow?
Well, the interesting part is that the opinions vary right now. From the exchange point of view, we haven't heard a lot of comments from them, and that's not unexpected. They're not going to really comment about how they think a share is going to be volatile or not volatile. Talking to a lot of the investors and traders we've been speaking to, yes, they're expecting this kind of pop here, and we've been watching how other markets are reacting as well. I checked out InTrade, which is the online betting place where people actually kind of handicap the odds of, events happening. And interestingly enough, there's a whole Facebook section on InTrade right now. One of the big bets being played is whether or not Facebook shares, Betty, will close above $45 by the time trading ends tomorrow. That's an 18% upside from that $38 IPO price. Right now, InTrade pricing out a 43% chance, Betty. So at least some optimism with regard to the other traders out there, perhaps not the ones in the stock itself, Betty.
Okay, would be a decent rise if that happened. Dom, thank you. And of course, a key member of our IPO Dream Team is Bloomberg West editor-at-large Corey Johnson, who's going to give a bit of a reality check. He has spent the past 3+ months digging through Facebook's regulatory filings. It was just last week that the social network revealed a new risk factor. Advertising growth is not keeping pace with user growth. And Corey Johnson in San Francisco drills down on what that means. Corey?
Well, let's just look at the user portion of this, because it's a really important part of this. Look at what Facebook, we showed a chart earlier, a different kind of chart, but let me show you their user growth over the course of the last 18 months, the last 6 quarters. Think about this for a second. In 18 months, they've added 50% more users, from 608 million users back in Q4 of 2010 to end 2010 to 901 monthly average users. That's a big number and a big increase, but the pace of the increase is slowing down. Now, where those users are is very important, and it might surprise you a little bit. So let me take you through the world a little bit. Chile, Turkey, Venezuela, they have 85% of those markets. When you go on to India, the UK, and the US, they've got 60% of their markets. Brazil and Germany, 35%. More big markets, Japan, Russia, South Korea. South Korea, very big internet market, but they're only 20% there. And most importantly, perhaps, China, 0%. So you can see where they is, you can see where they ain't, but the percentage growth of users that I refer to, but let me show you the actual numbers of the year-over-year growth for these guys, so the sequential quarterly growth on a percentage basis. So what you see there, again, is a pretty clear trend of user growth slowing down. So what could help them pick that up a lot? Well, obviously, taking China from 0 to something would make a big difference. But when you start to see the places where they're already reaching saturation points, you realize they don't have total green fields to grow into here. They've got to get to the places where they're not, China most importantly, and grow that penetration. Then, of course, that more revenues per user would help as well. But just adding users is not going to be as easy as it's been for Facebook thus far, Betty.
And Corey, why is that happening? Why is that slowing down?
Well, so that's the question, right? Is it about the law of large numbers? Is there, in fact, a network effect? When you start to add a certain handful of users, then it spreads like wildfire. They surely know what those numbers are like. The other disconcerting thing is that the new users they're adding seem to be worth less to advertisers, whether that's because they're in different parts of the world and not as many advertisers are trying to reach them there, or it's because they're on mobile, which is probably the case, and the advertising rates are not as high. But just adding more users isn't enough for these guys anymore.
Okay, Corey, thank you so much, Editor-at-Large Corey Johnson. Well, coming up, talking about the users, more than 900 million users and still growing, even though it may not be as much as before. But how can Facebook make money from mobile? We've got all those details next. That is Facebook by the numbers, and welcome back to Bloomberg's special coverage of Facebook's IPO, Facebook, the public network. I'm Betty Lou here in New York. Now, Facebook has nearly 1 billion monthly users. Of that, more than 500 million members log onto the site daily, up 41% from the year before. And mobile is growing faster than the overall usage, but Facebook has yet to monetize that growth with mobile advertising. So how does the social network plan to make money off of mobile? Well, joining me now to talk about this is David Eastman. He's the JWT CEO of the North American division of JWT. Also with us is Majid Abraham. He's the ComScore president and CEO. Gentlemen, thank you for joining me. Majid, let me start with you because I want to break down the numbers, because you were watching that segment earlier that Corey was talking about and how the users are, that momentum is slowing down, and you've got your own data on that.
Sure. I think that while the Facebook has achieved tremendous increase in the number of users of the internet population, but what we see today is that many of those same users on the PC are actually using mobile devices, and while the usage on the PC tends to be about 6.5 hours a month, on a mobile device is 7.5 hours a month. So they're actually longer, it's more intense, and for a large degree it's incremental usage. So it represents an incremental monetization opportunity for Facebook. You just basically check your feeds and all of that more often during the day than you do it on a PC.
And are they new users, a large part of them?
I don't think in the West they are necessarily new users, but I think what you're going to see is in the developing world where the primary mode of access will end up being a smartphone, there will be plenty of new users.
So David, from an advertising point of view, how does an advertiser capture that then?
Well, I think that's a really interesting question, and one that's been asked about mobile devices probably for the last 10 or 12 years.
Yeah.
And the first thing you need to remember is that the real estate on a mobile screen is much smaller, so the type of message that you can deliver needs to be sort of looked at in a different way. So I think it's not going to be the same sort of advertising that we would see even on the PC site or on any other type of channel. So it's quite difficult to say exactly what it'll look like.
Well, that's the question, right? What will it look like, or is it too early right now?
I think there'll be a lot of experimentation. I think brands are going to will probably need to get in early to experiment. Not everybody will get it right first time. But I think we'll see lots of different ways of using that screen, whether we'll be going away from the site to look at other things and then coming back to Facebook. But on the, I mean, it's probably the most downloaded app now, I think, Facebook. And for a lot of people, it is an operating system online. I've heard it referred to as the new Windows. So I think that people will spend a lot of their time actually on Facebook and navigating away and coming back. And obviously data is also photography. I think images are going to play a huge part in that. So I can see brands thinking about how do we use imagery, how do we capture people's attention by using photography rather than text.
Right.
I think there'll be a lot of experimentation over the next 18 months.
Majid, in the data that you're collecting and what you're seeing, the patterns, are people using Facebook, outside of just, you know, moving on to mobile, are people using Facebook differently than they were, let's say, 5 years ago?
Sure. I mean, Facebook has evolved quite a bit. They have introduced a lot of new features that they didn't have before, and the nature of the user has changed. 5 years ago, it used to be college students and very young audiences, and now you have even grandmothers that are very intensive users of Facebook. So yes, the usage has changed quite a bit. The news feeds are much more extensive now. And I think the news feed and embedding sponsored stories, which is one of the things that Facebook sells to try to amplify when fans like a brand, are things that lend themselves to advertising on a mobile device.
Right, I saw you nodding your head, David.
Yeah, they're trying to weave their brand story into the feed as opposed to making it something that is elsewhere. And obviously on a mobile device, it needs to be in the feed because there's nowhere else for it to be.
You don't have the space to put on the left-hand side or the right-hand side some ads and then the content on the left-hand side.
Right.
You have to basically insert it within. The other opportunity is, I think, is a huge opportunity for everything mobile, and certainly it's a big opportunity for Facebook, given that it has the #1 duration spent on mobile is local. Facebook knows about you, knows where you are, knows about where your friends are, and there is, I think, a tremendous opportunity to be able to marry your taste and your location and create some very superior advertising.
For advertisers to target their advertising then, right?
Correct.
Based
Correct.
on that local data.
Correct.
And how, I mean, that's important for advertisers, obviously, but that seems to be the wave of the future.
I think it is. I think that this, the idea of near-field communications as well, basically utilizing the technology that is in the device, and Facebook really piggybacking on that to a degree, I think will open up a lot of other areas for brands and advertisers that don't already exist. I also think, and one of the things that hasn't been talked about much today, or over the last few days, is will Facebook get into the mobile business in some way? Can you imagine them either coming up with an OS like Google or like Apple and Amazon actually producing devices?
Yeah.
So I think that's another way that they could monetize.
It's an interesting question. I mean, Majid, in your research, I mean, how practical would that be for Facebook?
I obviously am not privy to anything.
Sure.
I personally think that they would rather develop applications that run on somebody else's device rather than antagonize other people and try to compete with them. So all the set manufacturers and the operating systems. But I do think that they will focus on leveraging the state-of-the-art of mobile devices to be able to offer a good experience to their users, but to be able to monetize. As we said, mobile is still something to be figured out. I don't think anybody has totally figured it out yet, but it will be.
It certainly sounds like it's something that needs to be figured out fairly soon. Majid Abraham, thank you so much for joining me, and also to David Eastman for coming back on our program from JWT. And when it comes to Facebook's growth, Mark Zuckerberg puts his faith in the idea that the more time that goes by, the more users will be willing to share. We just talked about that. So is Zuckerberg's law holding? That is next. But first, as we go to break, let's do a little comparison. What exactly does a $104 billion valuation mean for Facebook? It makes it bigger than Yahoo, Priceline, Zynga, Groupon, Netflix, AOL, and Pandora combined. We'll be back.
Welcome back to our special coverage of the biggest tech IPO ever, Facebook, the public network. I'm Emily Chang. Before Mark Zuckerberg started his social network, the world didn't use words like friend and status update the way we do now. And that change is the result of an ever-increasing willingness to share information about ourselves. Just what is Zuckerberg betting on, though? Our John Ehrlichman is outside Facebook headquarters to explain. And it's a big bet, John.
Absolutely, Emily, and this is something that's been described as Zuckerberg's law, and it's not something you're going to find in the law school books, but it is absolutely essential to the company's growth. For a guy who just turned 28, Mark Zuckerberg's got a lot. His own company, a Hollywood movie based on his life.
If you guys were the inventors of Facebook, you'd have invented Facebook.
Even his own law.
Zuckerberg's law is the mathematical equation that every year the amount of information that people on Facebook share doubles.
Zuckerberg first shared his prophecy in 2008. It's social media's version of Moore's Law from Intel co-founder Gordon Moore, which states the number of transistors that can fit on a chip doubles every 2 years. As it turns out, sharing may be happening at a faster pace than Zuckerberg predicted. Analytics firm Social Bakers looked at the top 5,000 Facebook pages, the pages with the most fans. On a random day in February, there were about 479,000 shares on those pages. On May 13th, there were more than 1.2 million shares, meaning sharing has grown by more than 2.5 times in less than 3 months. Zuckerberg's prediction is key to keeping advertising flowing to Facebook, especially with General Motors deciding to take its business elsewhere.
A lot of advertisers, large and small and in between, are trying to understand their ROI, return on investment, through placing ads on Facebook.
It's also key to Facebook-focused businesses like Million Eye, which not only enables people to rent movies like The Dark Knight on Facebook, but also to share information with friends as you watch.
It really lends itself to taking an offline social experience like going to the movies or going to a concert and really taking it to an online experience where people are spending most of their time, like Facebook.
But while Zuck's law is showing no signs of slowing down, there's always the risk people will do less of that sharing on Facebook and instead do more tweeting or pinning.
If consumers stop sharing information, the data set becomes stale and Facebook's ability to target deteriorates.
But obviously the beauty of all this, Emily, is that instead of having to hire an army of people to go out and put flyers in your mailbox, you can just use the Facebook user base to go and send that message.
All right, John, hang on. I want to bring in Corey Johnson here as well. And I want to talk a little bit about if Zuckerberg is right about this law. A lot of cash is going to pile up in Facebook's coffers. How do you imagine that a company that hasn't had that much cash to date will use it?
Well, acquisitions are an obvious thing. I think that this whole deal has been handled really well. You know, we watched the way Groupon botched their IPO process with so many missteps, and we've seen other ones be a little bit more sloppy. They've managed this thing so well that you think they're actually kind of grown-ups about the way they run this business, and maybe they look at that cash pile, among other things, as a way to just be ready for opportunities when they happen and to be safe when the economic conditions turn in the wrong direction.
And John, I know you've been taking a closer look at this for the last few weeks, especially since the purchase of Instagram. What other acquisitions might Facebook be looking at? You know, a lot of these startups out there, it's their dream to get bought by Facebook.
Absolutely, which is a good or a bad thing depending on which companies you're investing in. Look, I think there's a growing consensus that any business that is a tack-on in this world that's unfolding of advertising is probably a no-brainer for Facebook. First of all, Mark Zuckerberg, if we're going to take what he said as where they're going, suggested that they don't want to do massive deals. You know, plus $1 billion. They like to do deals to acquire talent, to perhaps keep up-and-coming competitors at bay. But also, if they're trying to better explain this advertising story, why not acquire more of the analytics firms that are finding out exactly how well Facebook is working?
Mark Zuckerberg has said he doesn't plan to do any more deals of the Instagram size. Then again, Paul Kudrowski earlier on Bloomberg today said he expects Facebook to buy Pinterest for at least $1.5 billion. We shall see. Thanks so much, John and Corey. Now, coming up, privacy is one of Facebook's biggest challenges going forward. We will look at how the company is trying to walk a fine line between protecting users' privacy and using their information to fuel growth.
Welcome back to Bloomberg special coverage of the second largest IPO in U.S. history, Facebook, the public network. I'm Betty Lou. Dominic Chu is live at the NASDAQ headquarters right now, where Facebook will have a big day of trading tomorrow. And Dom, how have other recent internet IPOs, how have they fared on their first day of trading? We know some of the big ones, but go through them.
Well, yeah, that's right, Betty, because everybody's anticipating this to be a really, really volatile session for this IPO. A lot of demand behind it. So we wanted to take a look at some of the other big internet IPOs from last year. So let's kind of start off with what's happening with Zynga here, all right? Or with Zynga overall. What it really comes down to is if you look at the price there, overall, $10 is the IPO price for this particular issue here. During the day, it traded as high as $11.50 and ultimately finished at $9.50. LinkedIn, a very different scheme for LinkedIn here. LinkedIn shares, $45 was the IPO price. It opened trading at $80, so almost double already. Went as high as almost $123 before finally closing at $94.25. The other big one here, of course, Groupon, the internet daily deal site. Back in November, it IPO'd. $20 was the IPO price. It opened trading much higher at $28 and went as high as $31 before finally closing at $26. And of course, Pandora, the internet radio company, started with their IPO $16 per share. It opened trading at $20 per share, so another 25% increase. Went as high as $26 and closed lower, much lower, $17.42 there. But, buddy, it's not just about the first day of trade. We also took a look at what the performance has been since that IPO. We took the IPO price and took the closing price today, and here's what we came up with, right? If you look at the overall picture, yes, Zynga, minus 17% since that IPO price at $10. Also, Pandora, minus 34% since the IPO price to date. Also, Groupon, minus 38%. The one real standout here, Betty, is LinkedIn, because those shares are up a whopping 133% since the IPO price. So LinkedIn, yes, the good case for these internet IPOs, but the other ones maybe still trying to get back some of the gains they saw on that first day of trading there, Betty.
Really interesting how LinkedIn kind of defied the naysayers so far, Dom. Thank you. Let me get back to Emily Chang in San Francisco with more. Emily?
Thanks, Betty. Well, Facebook's business relies almost solely on advertising, as we've been discussing. But earlier this week, the world's biggest automaker, General Motors, pulled its Facebook advertising budget, saying the ads are having little impact on car purchases. At the same time, Ford said it's stepping up its ad efforts on the social network. So how effective are Facebook ads really? Well, let's bring in Kurt Detweiler, former Executive Vice President and Creative Director at McCann Erickson. Kurt, welcome. So GM cutting its Facebook budget. How big a deal is that? It certainly seems pretty extreme.
I think people won't react to it as a vote against Facebook. I think that's the initial reaction of a lot of people. I think it's what people are going to wonder. But the truth is, a lot of people will see it as a personal choice of GM's rather than a veto of Facebook as a valid place to be, because just too many people exist and live their lives on Facebook.
So let's talk about the truth, though. How effective are Facebook ads really? Of course, 901 million users. Brands must think to themselves, we have to be there. But are the ads really working?
I think it depends on the ads, and I think it depends on the agencies and the marketers and the ads that they come up with and put on Facebook. I think there's an opportunity to be more innovative and more proactive about bringing ideas to Facebook about how you advertise and how you use it. I think if you just stick to a very standard model, you might not see the traction that you want to see.
So it's not Facebook's fault. Advertisers and brands should be doing a better job of taking advantage of the ecosystem.
That's right. It's a new channel, and people are going to have to learn to get fluent with that channel. But when they do get fluent, they're going to come up with better ideas.
Now, you've worked with a lot of big clients around the world. How do they view Facebook today versus Google versus Twitter?
I think Facebook is still probably the best place for them to be. I think Twitter is probably second best and Google third.
Yet, when you see an ad on Google, you're searching for something and there's intent while you're there. You could go purchase something right away.
That's right, but I think Facebook is an individual marketing channel for individuals. So they see it as their own broadcast network. So if you can tap into that and tap into their lifestyle and their psyche and relate to them the way they want to project and broadcast themselves, you have a chance to broadcast your brand in an equally compelling manner.
Are there any campaigns that your clients have done that stand out to you having really worked on Facebook?
I think the things that are really going to work on Facebook have yet to be done. I think that people, and when I say people, I mean advertising agencies, digital agencies, integrated agencies, and their clients are going to have to collaborate a little more and commit to Facebook a little more as one of their top channels of communicating to their consumers.
So what do they need to do? I mean, how do they make the ads better?
They commit to them more, and they commit to...
More money?
I don't think it's necessarily about money. I think it's about committing to a particular idea that will resonate in that space in a different manner than it resonates somewhere else, or something done in that space that can then travel over to another media and be integrated with those two pieces, basically.
So advertisers and brands have a lot of work to do, not necessarily Facebook. Kurt Detweiler, former creative director at McCann Erickson, thanks so much
Thank you, Emily.
for joining us today. Coming up, in the risk factors listed in Facebook's S1, a reason Mark Zuckerberg has had to apologize over and over again: privacy. We take a deep dive into Facebook's privacy issues coming up on our special Facebook, the Public Network. Welcome back to our special coverage of Facebook's IPO, Facebook, the Public Network. I'm Emily Chang in San Francisco. The social network priced its shares late this afternoon at $38 apiece for a valuation of more than $104 billion. Despite the excitement for the start of trading tomorrow, one issue that keeps raising red flags for investors is Facebook's ability to keep its users' information private. We took a closer look.
A week before its IPO, Facebook launched a new go-to hub for its terms and policies to combat user confusion about its ever-changing privacy rules. The social network revamped policies the same day, even highlighting what had been added and deleted. The big changes? Facebook will now be storing your information for as long as necessary and can use that information to show you ads outside of Facebook. A reminder to would-be investors of another potential revenue stream.
The more ways they're able to monetize the user data and sell to big advertisers, the greater the privacy risks.
All over the world, regulators are scrutinizing Facebook more than ever. The social network recently agreed to 20 years of privacy audits in a settlement with the Federal Trade Commission, and lawmakers are constantly questioning if it's enough.
We just have to make sure that the information which Facebook gathers about these kids is then not turned into a product which is sold to private sector companies that parents don't have the right to be able to block from happening.
On its journey to an IPO, Facebook has repeatedly angered users with privacy blunder after blunder. In fact, of 25 blog posts by Mark Zuckerberg over the years, 10 are apologies, including one where he famously wrote, "Calm down, breathe, we hear you."
Well, Mark is absolutely responsible for everything to do with the product, so privacy as much as anything else. I don't see him as a privacy, predator, which some people do. I think he recognizes that people need to feel that their data is secure on Facebook.
But as more users go mobile, an area Facebook has yet to monetize, the company will be looking for other ways to please investors, and your information is its biggest asset. And as Zuckerberg pursues his mission to connect the world, potentially even in China, privacy may well remain his biggest challenge yet.
Since he is the sole, buck stops here decision maker at Facebook, he's got a very heavy burden, and he has to show extraordinary judgment, and we can't know if he'll be that good.
For more on how privacy is impacting Facebook's push into international territories, we are joined by the man that just a few years ago oversaw the entire privacy strategy at Facebook. Chris Kelly is Facebook's former chief privacy officer. Chris, great to have you here.
Thanks
You
for
sort of
having me.
chuckled when we mentioned that blog post from Mark saying, "Calm down, breathe, we hear you." He has come a long way since then, and he's got a long way to go, especially if he really is going to connect the world.
And having lived through a lot of these controversies and trying to explain to people, a lot of them were driven by misunderstandings about what was going on with the product. The news feed, revolt was driven largely by a misunderstanding about that we were flipping the privacy settings on people's, on what people were posting on their photos, and we weren't. And so we had to explain that to them, and it took some time with users, it took some time with regulators. But as people understood better and better what was going on and the dedication that the company had to giving users actual control over whether they shared it just with their friends, only with themselves, or publicly eventually. I mean, there wasn't really a setting until, I think, 2009 to share with the world and make it absolutely publicly available. The control was a core of the dedication of the site from the beginning.
So let's talk about the future, though. If he does enter China, we know he wants to. What kind of compromises is he prepared to make?
I mean, as Mark has often said, you cannot connect the whole world. That's the mission of the company. Without connecting China. But there are serious challenges, both from a free speech, from a government control perspective, that have to be met. So the company has chosen, rightfully in my view, to continue to focus on other markets, and the Chinese discussion has been deferred and deferred and deferred. Obviously, if there were some more give on the part of the Chinese government about the extremely onerous regulations that they want to subject internet companies to, that I think that there would be a more productive conversation about Facebook entering China.
Do you think it could ever happen, given the Chinese government's unwavering stance on this issue and Mark Zuckerberg's own mission and values.
I think that there's change over time, and I think that you'll see reformers in China rise to the top, and that a lot of changes will happen.
Do you think China's going to budge, not much?
Well, I mean, obviously Facebook is busy connecting almost the entire rest of the world, and to the extent that China wants to be fully integrated into the world community, it's hard to imagine them trying to stay off of Facebook.
Do you think the privacy issue has taken even $1 off this IPO?
I don't know how people are valuing the IPO at this stage. Obviously, investors are going to make their own decisions on that. The privacy challenge for the company has been, A, explaining its philosophy well, and it has made some missteps. I mean, when I left the company in mid-2009, we had just wrapped up an agreement with the Privacy Commissioner of Canada, which we had initially been accused of a whole bunch of things that actually weren't going on by a public interest clinic at one of the Canadian law schools, and we worked very productively with the Canadian Privacy Commissioner to come to a settlement. When the privacy policy changes in late 2009 were made, after I left, there was actually quite a controversy, and that's what caused the FTC investigation and the settlement, which is an unfortunate. It's hard to innovate when you have 20 years of privacy audits sitting there, but obviously the company is going to continue. If you saw the changes on Monday and the very good public presentation that Aaron Egan, who's taken over as Chief Privacy Officer, did about those changes, you'll see that the company is very dedicated to control and to transparency, and that there were productive conversations with regulators in this instance.
And in that conversation, Aaron hinted that Facebook is potentially looking at using data to advertise to people outside of Facebook. Of course, that is a new potential revenue stream, but is that good from a privacy perspective? Are users going to accept that?
It can be done in a way where the data remains under control of Facebook as the intermediary, and it's only shared with those third-party sites at the express direction and control of the user. And that is what control means to me. And so I think that there's a great potential to do that. There's a lot of technical solutions that, I mean, before Facebook, there was really it was binary on the internet. You put something up and it got crawled by Google and it was available for all time. Facebook has given users an immense amount more control over what's shared with whom, and we had an explicit setting saying, well, did you want a search engine listing at all? From the beginning, and we architected that very carefully, and we thought about how users were going to react to it, and what some users wanted it and insisted on it. So that control layer that Facebook has added to the internet is a great positive, in fact, a competitive advantage for Facebook going forward.
But certainly Mark Zuckerberg is going to be running into these things more and more as Facebook expands. Chris Kelly, former Chief Privacy Officer at Facebook, thanks so much. Great to have your inside perspective on this issue. Facebook is just hours away from trading as a public company, but is the young CEO ready? That story next.
I'm Betty Lou here in New York, and this is special coverage of Facebook's IPO, Facebook, the public network. You've heard the saying, it takes a village. Well, as Facebook goes public, Mark Zuckerberg wants to hear from his own village, the people he most respects, about how to make sure his venture succeeds.
As eager investors await the opportunity to own a piece of Facebook, Mark Zuckerberg is investing in his future, assembling a high-profile team of advisors to teach him what it takes to be a success. In Zuckerberg's corner, Donald Graham, CEO of the Washington Post company. Zuckerberg emulated the Post company's shareholder structure and turns to Graham for advice on management. For guidance on corporate strategy and economic issues, the CEO of Facebook gets tips from co-founder and former CEO of PayPal, Peter Thiel. Another member of the PayPal mafia, Reid Hoffman, was an early investor in Facebook. Today, the co-founder of LinkedIn advises Zuckerberg on scaling businesses and working in China. And Bill Gates, founder of Microsoft and the Bill and Melinda Gates Foundation, regularly advises the young billionaire on philanthropy and the business of giving back.
So with all that world-class advice, is Mark Zuckerberg ready to be the head of one of the world's largest public companies? With me to talk about that is David Kirkpatrick. He's the author of The Facebook Effect and also founder of the Techonomy Conference. He's interviewed Mark Zuckerberg numerous times in his past. Also staying with us is Bloomberg contributing editor Paul Kodrowski, a former equity analyst and currently an early-stage venture investor. David, let me start with you. As we were just showing, it takes a village to make a man like Mark Zuckerberg. How important has that been to him?
Well, actually, I just saw on Facebook today that he had lunch with Don Graham. So, you know, he's actively engaged with those people. But, yeah, I think he has really actively sought the advice of experienced, especially entrepreneurs like Marc Andreessen, somebody who he really looked up to. Sean Parker played a huge role at an early point and still consults with him on a lot of things. And I think Mark has had a very good ability to recognize where he's strong and where he's weak and fill in the gaps, either by educating himself or simply by hiring people like Sheryl Sandberg, who are really good at doing things that he can't do and probably doesn't even want to do.
And you think this has shown up in the way he has behaved so far?
Oh, my God. I mean, he's an incredibly good CEO. I think there's no question about that. The effectiveness that he's shown in building this company, I mean, think about one little thing. Facebook has almost never gone down. I mean, there's really never been a system outage of any length. Think about that. You know, from in the entire time, 8.5 years of growth.
Compared to like a Twitter or something like that?
Compared to almost any other site, you know.
We're supposed to say that.
Just creating the culture that would enable that reliability takes good management. It's like just an example. You can find a lot of other examples. I think he's made mistakes, but he's great.
I mean, on that point, and David brings it up in part, you know, having Mark advising him, Andreessen versus Zuckerberg. That is, Mark Andreessen tells a great story where he talks about, you know, one of his first encounters with Mark, trying to give him some advice and talk to him about, you know, sort of the history of computing and everything else. And he's talking about the early days of the browser industry and what he went through. And he talks about, you know, Mosaic, which was what, you know, eventually got commercialized and turned into Netscape. And Zuckerberg said, well, what was that again? Remind me. I mean, it's a remarkable story, right? I mean, here's an example of
That's
we forget.
28 years talking.
Right. No, exactly. But I mean, to be able to, leaving aside that he didn't know, to be able to say, I didn't know, most CEOs would bluff it.
Right.
They'd bluff it. They'd say, yeah, and then just carry on.
No, because that's such a great example. He really, if you say something that he doesn't know about, he will grill you on it. I mean, he's very easily bored, and if you say something he already knows, he will totally space out. But when you say something he thinks is interesting and new, he doesn't hesitate at all to admit, no, I don't understand that.
Do you think he'll have the patience for Wall Street for being the CEO of now a public company?
I think not, but that's not as important as having people around him who will, right? And this is the story of founder entrepreneurs, is being able to surround yourself with people who right away out of the gate have the, you know, quite honestly, the stamina and the tolerance for, you know, boring quarterly issues to be able to sit there and deal with shareholders on a regular basis. That's the CFO and the ops stuff. But to be able to be the visionary figurehead, there's no reason why he can't satisfy Wall Street doing it.
Yeah, and he's got David Eversman, who's the CFO, an incredibly experienced guy who really gets Mark's mindset and yet can just go and do it himself, kind of translating Mark's will, but also with tremendous experience. So I couldn't agree more with that.
Well, he's built a very successful company, and people give him a pass for a bit of his quirkiness and maybe some of his, you know, for instance, his decision to buy Instagram, you know, and gave it to the board, while, you know, where he already had made that decision. So certain types of behaviors he gets a pass for because he's built this successful company. But at what point does it become tiresome? At what point will the hoodie get tiring?
One thing I've heard internally from very senior sources at the company is he does not intend to be on quarterly earnings calls. On the other hand, he did not intend to go on the roadshow either, and he was induced in the end to do that. So if he ends up finding himself having to waste a lot of time in his mind, spending like a day a month every quarter preparing, and he's going to really hate that.
Larry and Sergey haven't either at Google, to be fair. I mean, they don't exactly hang out on quarterly calls. They show up now and then, and it's really exciting, but it's not as if they're there constantly. So that precedent's been set.
Okay, Paul, David, thank you so much. Interesting discussion on Mark Zuckerberg. And we continue to get fresh information surrounding Facebook's IPO and its investors. Those details are next.
Welcome back to our special coverage of the largest technology IPO ever, Facebook, the public network. I'm Emily Chang in San Francisco. Our editor-at-large, Corey Johnson, is here with me now, and we are getting word, Corey, that Facebook has allotted 15% of its shares to retail investors only. How unusual is this?
Well, that's actually a lot. Usually in an IPO, the institutional money managers are the ones who take down the hot IPOs and get the benefit of that big boom. So this shows you how much demand there was on a retail level, which may also give you a clue what's going to happen tomorrow. But it also means that that's about $2 billion from retail investors. That's fairly amazing.
And yet, what's the likelihood they're going to end up on the wrong side of the trade tomorrow anyway?
Well, look, they're the ones who are going to get that $38 price. So if the stock pops, they may get that benefit if they sell then. But buying in the open market seems crazy.
We'll be watching closely tomorrow. Thanks, Corey. Stick around for more of our special coverage of Facebook, the public network. Still to come, how much money are the key players taking home? And what could be the next Facebook?
You are watching Bloomberg special coverage of Facebook's IPO, Facebook, the public network. I'm Betty Lou in New York, joined by Bloomberg West anchor Emily Chang in San Francisco. Facebook announced just after the market closed today that it is pricing its shares at $38 apiece and will raise about $16 billion, making it the largest tech IPO in history and the second largest U.S. IPO ever after Visa. Trading will start tomorrow morning on the NASDAQ, and that is where Bloomberg's Dominic Chu has been standing by for the last few hours. Dom, you may be the last man standing there until people start pouring in tomorrow morning for this IPO. What else are you hearing down there?
You got it right, Betty, because right now things are all quiet on the NASDAQ front here in Times Square in New York City. But you can see behind me right now lots of stuff going on, including a Facebook logo, because we're going to expect to see, like you said, that pricing kick off at just around 11 a.m. New York time tomorrow morning on Friday. So that's going to be a big deal for us here. Also going to keep an eye on what's going to happen overall with the demand picture for those shares, because everybody's going to keep an eye on whether or not there's enough demand, enough buzz to kick in this over-allotment option, or this green shoe, where the underwriters can buy an additional 63 million shares to then sell to investors as well. So again, Betty, this is going to be a busy day here at NASDAQ tomorrow. I know that we're winding things down for at least tonight, but still getting ready for a big day tomorrow, Betty.
And are people telling you that we will see a pop in this price? I mean, I'm sure the hope is for among investors, but are people expecting that?
Well, there are a lot of people expecting that kind of a move, only because this is one of the more hyped IPOs that we've seen since, like you said, the big ones, names like Visa, names like General Motors, and then you got to go back to the internet days back in the mid to late 1990s to see some of the buzz generating around an internet company like a Facebook or like a Google or Yahoo or the other big names, and Amazon.com. But what it really comes down to is whether or not NASDAQ, whether or not a lot of these other venues will see a surge in trading because of this, that remains to be seen. But we'll find out more. Like you said, a conference call going to be hosted tomorrow morning at 10:15 a.m. New York time, where NASDAQ will kind of tell market participants, keep them apprised of what's going to happen with Facebook trading up until those shares start trading at approximately 11 a.m. and then about an hour or so after that, so that everybody knows what's going to go on with Facebook and how it's trading. So again, Betty, lots of attention, certainly by NASDAQ and market participants, being paid to Facebook's IPO tomorrow morning.
Dom, thank you. I want to head now to San Francisco again and to my colleague, Emily Chang. Emily?
Thanks, Betty. Well, over the last couple of hours, we've been taking you through the business behind Facebook. We've already talked about the growth in mobile users, but another big potential growth area for Facebook is international users. Our Bloomberg West editor-at-large, Corey Johnson, has more on that, Corey. It's going to be a very important area of growth, too.
Well, indeed. And I want to also update this. There's more news crossing with the Facebook IPO. We're learning that they're going to pay bankers about 1.1%, which is a pretty low fee for an IPO. It shows you just how desperate the bankers were to get in on this deal. But it's a kind of a hot deal. It brings lots of new customers. And I guess that's the big question now. What's this deal really worth, and what should they be paying for it? How do they come to that conclusion? So we're joined by Francis Gaskins, as well as Arvind Bhatia of Stern Agee and Leach. Arvind has a price target of $46 on this. Francis Gaskins has a different view on this. Francis, let me start with you. What's your take on this company and this IPO?
Well, it's an 8-year-old company. They shot for the moon. They got the stars. I think in this particular IPO, it's the biggest pump and dump in history. And the reason I say that is when they first did it, it was going to be a $5 billion IPO going to, and the money going to the company for growth. Then it's a $10 billion, and now it's a $16 billion deal, where $9 billion goes to selling shareholders, and that more shareholders would sell if they could. So what do they know? They know a lot more about Facebook than I do, than you do, and they're stampeding towards the exits.
Well, all right, Arvind, what about you? You've got a higher price target on this thing than the offering price. How do you get to that target?
Well, clearly, you know, to get to that target price, we are hoping that the trajectory that Facebook is on today will continue into the foreseeable future. We certainly look at this as the next Google, and we think that they're sort of in the very early stages of figuring out the code on the advertising market worldwide. So they're not only disrupting the advertising market, but many other industries. And so this is, you know, I think in the big scheme of things, this is one of those stocks that a lot of large cap growth portfolio managers are going to want to own. It's going to become a core holding. So we see our valuation is based on 30 times next year's EBITDA estimate. We think EBITDA is growing at about 30% a year.
Well, so you really see a re-acceleration of this business away from the trend that we've been seeing, where EBITDA margins have been shrinking, where revenue per customer has been shrinking, where user growth has been slowing?
Well, look, I think one of the things that you're facing here is the law of large numbers, and I think we fully expect these kinds of trends to be up or down, you know, up and down from time to time. This is not going to be a stock you want to own necessarily for the next quarter or next 2 quarters. And so I think, you know, especially retail investors who are going to, you know, want to see the stock go up every quarter, they may be disappointed. I think this is more for institutional investors who can own the stock for the next 2, 3, 4 years. And again, if you look at the history of Google, it started at $85, right now trading around $600. It always looked expensive. Valuation was always a concern, but again, they were in the midst of disrupting the advertising market back then. They continue to do that with search, and Facebook is going to do the same thing with social.
Well, to that point, Francis, let me ask you. I mean, I talked to an investor the other day who told me he was getting an allotment of shares, and I said, won't you flip him the deal? He said, I didn't flip Microsoft. I owned that for years, and this could be the next Microsoft. Do you, when you look at this business, and do you look at it as the time to own it is now and for a long time?
No, I think people are nuts to own it if they can sell it in the aftermarket, because I think what GM did is I think that probably froze the advertising growth for Facebook this year. I mean, if I were an advertiser fortune 100 company, I would say, okay, fine, let's keep the current ad budget there, but let's not increase it. So I think Facebook can pretty much kiss goodbye. It's in big increase in advertising revenues this year. The thing about mobile is people spend 7.5 hours on the average on the mobile per year. I mean per month, and the time to get the revenue from there is now, not later. If they haven't figured it out now, they won't. I mean, when I hear the people talking about if this, if that, I mean, it sounds like it's a venture capital deal. I mean, we have a $100 billion deal. You want to see, you know, strategic growth. And I think talking about strategy, I think Zuckerberg is not a good strategic person. I think that he designed this for the desktop environment. I think things changed rapidly to mobile. And what I point to is they filed the S1 February 1st, and they only started testing mobile in the middle of March, which is 5 or 6 weeks later. And in a way, that's all you need to know about their strategy. They don't have any.
Yeah, no, it's interesting. I remember seeing Mark Zuckerberg speak, I think it was fall of 2010, saying we'll never release an iPad app. So clearly that wasn't part of the plan. They, of course, since have done that. But it also sounds like you don't give them credit. I mean, they have succeeded over and over again in the things that they've done. Should we just assume they won't ever succeed again?
The future is the past is the past, and I think when you have 100 billion, yes. Because I just don't think they can reinvent themselves. I think they're trying to reinvent themselves. I think they're throwing a lot of things on the wall. It's not working. I don't think they're ever going to be profitable. I don't think mobile's ever going to work for them. I think they really screwed up their advertiser base by losing GM. I mean, they've got significant problems, and Zuckerberg says, trust me. Well, you just can't trust him. The thing about Zuckerberg, he doesn't know what he doesn't know. I mean, if you're worth $20 billion, what else do you need to know? You don't need to know, and he doesn't know anything about But the other thing about Wall Street, he's the bad boy of tech. I mean, he loves to thumb his nose and stick it in the eye of Wall Street. You don't do that. I've discussed some of the problems. He's going to need the support of Wall Street. People are going to have to believe his estimates based on his behavior. I wouldn't believe his estimates.
Yeah. Arvind Bhatia, what about you? When you look at Zuck's behavior and Zuck's iconoclastic approach, does that give you pause, or do you say it worked for Steve Jobs, it could work for somebody else?
Yeah, I think that's exactly why you want to look at this company, take a hard look at this company. This is not your typical run-of-the-mill company. This is, again, revolutionizing many industries. And I think when you look at the overall opportunity, the $600 billion market, if you're a top 100 company and you've got $1 billion in advertising budget, I believe if today you're spending only a couple of $1 million, you're going to be spending 5–10% of your budget on social. And I think a big part of that is going to go to Facebook. The problem right now is advertisers are also trying to figure out what the best way is. To counter the point on GM, Ford and a couple other people came out in the last few days, and they said they're having a great experience. So I don't think you can take one example and extrapolate that and say, well, that's the whole story. It's not.
Arvind Bhatia, Stern, Adrian Leach, Francis Gaskin's IPO Desktop, thank you very much. Emily?
Thanks, Corey. Clearly opinions on both sides of the spectrum about the true value of Facebook. Now, with Facebook set to start trading tomorrow morning, potential investors are wondering how much more can the social network grow. That is coming up.
Welcome back to Facebook, the public network. I'm Betty Lou here in New York. If you combine the value of mega companies like Time Warner, Viacom, CBS, and Yahoo all together, they still don't add up to Facebook's initial valuation of $104 billion. And for more on what is next for the social network and for other internet startups, we turn back to our Bloomberg contributing editor, Paul Kudrowski, who is also an early-stage venture investor. Also with us is Rick Heitzman. He's the founder and managing director of tech venture firm Smart Capital. He's an investor in Pinterest, by the way, a new social network company that just announced a $1.5 billion valuation after raising $100 million from other investors. And gentlemen, thanks again thanks again, Paul, for being with us, and to Rick for joining us. So, Rick, let me toss this first question out to you, because we've been talking about this flashing $104 billion valuation. Is this going to fuel a tech bubble here?
I don't think so. What you see in a bubble is kind of people undifferentiated among good and bad companies. And I think that Facebook is clearly head and shoulders among all the companies now in terms of its growth rate, its ability to monetize, its revenue, not only user growth rate, revenue growth rate, and profitability growth rate. So far we haven't seen any bad companies receive a high valuation or a tremendous amount of capital. Although, depending on where we are in a year from now, that might have changed.
How? In what way?
I think that you're going to see more people, if it continues, if Facebook trades to a $300 billion valuation and people get excited and angels decide they need to be in the next Facebook. It's how things started to roll in 1998.
There's a feeling, to Rick's point, there's a feeling of being left behind or left out, right? Which really starts to snowball once you see an offering like this or the kind of valuation, and success, relatively speaking, that Pinterest is having at its current stage, and people just can't stand being left out, right? It's this idea of like hearing about a party that you can't go to, and I keep hearing about this party. Why can't I come? Well, you can come. All you have to do is ante up cash, and once people realize that the party isn't that exclusive, I can ante up cash, then they start bidding for things, and that's when you.
So there's not that situation yet of too much money chasing too few deals right now. There isn't that situation quite yet.
No, as a matter of fact, venture capital is contracting. So interestingly enough, to the extent that we're worried about a bubble, venture capital is seeing year-over-year declines in terms of the actual capital allocated. We were just talking about that, before we came on. And so it's going to take a reversal in that phenomenon more than anything else to really drive it at the private stage.
Rick, you said that it's actually a warning sign to you, or at least concerning, that there are more insiders than usual that are selling their shares in Facebook?
Well, as the allocation increased and the size of the offering increased, the insiders took a disproportional amount of that over-allocation. I think some of the venture firms and some of the people who have been in for 6, 7, 8 years deserve that piece of liquidity, and it's about time. They have investors they have to return capital to. But always insider selling does send off signals that how long are they going to be around for.
And that's the point I think we were talking about earlier. This is this idea of Facebook going public a second time, right? You have companies, investors who've been in this for 2 years and feel like, this is the time for them to get liquidity. This isn't them now signing up to be locked up. This is them saying, I got in 2 years.
They've already been locked up.
I've been locked up for 2 years, and now I want out. And it's a perfectly from their standpoint and from the standpoint of their investors, it's a legitimate request, right? I want my liquidity now.
Right, which makes perfect sense, in which case it would make your concerns maybe a little less concerning then, if you looked at it that way?
If you look at it that way, I think you feel differently from the investors who've been in for 6, 7, 8 years as opposed to the investors who maybe just got in 18 months ago. But you're also seeing a more fluid secondary market now with companies like Second Market, and there are some folks who have been able to get liquidity along the way.
Is everybody trying to look for the next Facebook? Is there another Facebook out there?
You know what I always love to say? I love those kinds of questions because you get that all the time. I'm really looking for the next Google, and my question always is, were you in the last one? And so what makes you think that given you missed the last one that you have any prospect of finding the next one? As a matter of fact, it's even less likely because you've demonstrated a remarkable lack of competency.
Could be staring you right in the face.
Could be staring you right in the face, you wouldn't
know.
know. So it's kind of, in a sense, it's a trap, right? It's a trap to even think that way. Because if you actually did think that way, you should race out and raise a fund immediately, and that you can't tells you that no one else believes that you can spot that next Facebook anyway.
There is a next Facebook out there. I don't know what it is. I think you have to start with, hey, here's a company that's doing something very different and very interesting. And it seems like every quarter or so, the blogs put out, this is the next Facebook, and the New York Post puts it on the cover sometimes. And that's not the way it really works.
Usually that might be a sign to run away, perhaps.
USA Today sometimes is a sign to run away from conventional wisdom. But most of the companies that start off, that become great, start off as non-conventional, doing things differently.
Yeah. And they start off being branded as toys. One of the classic criticisms of the most disruptive early-stage companies is people say, they just dismiss it entirely and say that's just nonsense, it's a toy. Facebook was deemed a toy originally. Pinterest deemed a toy. I mean, it's really an interesting phenomenon.
Okay, Paul, thank you very much for joining us throughout these last 2.5 hours, and also to Rick Heitzman as well, who is with the venture firm First Mark Capital. And the Facebook IPO will mint a few new billionaires come tomorrow morning. Who are they? That is coming up.
I'm Emily Chang in San Francisco with Bloomberg's special coverage of Facebook's IPO, Facebook, the public network. The Facebook IPO is set to make a select group of insiders a whole lot of dough. Our John Ehrlichman is outside Facebook headquarters with that story. John, among the soon-to-be millionaires.
Yeah, I've got two numbers for you, 28 and 29. Mark Zuckerberg just turned 28, and he is now the 29th richest person in the world, but he is only one chapter in the Facebook billionaires story. Here's the rest of it.
$1 million isn't cool. You know what's cool? $1 billion.
Yep, welcome to the Facebook Billionaires Club, headed by none other than Facebook founder Mark Zuckerberg, who on paper is worth north of $19 billion. Another commonly spotted face on the IPO roadshow, COO Sheryl Sandberg, is also part of the B team with a stake that on paper has crossed the $1 billion mark. But you don't have to be a current employee to be a Facebook billionaire. Co-founder Dustin Moskovitz will be worth around $5 billion, while the former Facebook president Sean Parker said to be worth around half of that.
The world better prepare for when I'm a billionaire.
Another Harvard co-founder, Eduardo Saverin, recently renounced his U.S. citizenship in anticipation of a tax bill for his 4% stake, worth more than $2.5 billion. And yes, those who invested early have been handsomely rewarded. Peter Thiel, a well-known member of the PayPal mafia, invested just $500,000 in 2004 and is on the Facebook board. Not bad for a day at the social networking office. And I'm glad you mentioned the millionaires, because they've still got to come to work every day, and certainly keeping them interested in coming to work is another part of the Facebook story, Emily.
Indeed, indeed. Thanks so much, John. Now, even if they can't all join the Billionaires Club, there are still plenty of Facebook employees set to become newly minted millionaires. The cash infusion bound to change the landscape of future startup as it floods into Silicon Valley. So who will be the next big tech star, and what's the next big idea? Maha Ibrahim of Canaan Partners joins me now in the studio. So let's take a step back and look back to what happened with Google when all of those newly minted millionaires entered the ecosystem. How does that inform what's going to happen starting tomorrow when Facebook goes public?
Two things happened when Google went public, or at least a couple of years after that. One, you had a bunch of Google millionaires that became this class of super angels that we in the venture community have been talking about and working with over the last couple of years. And they've really been the genesis of a lot of the new ideas that we've seen in the last several years. The second is these ex-Googlers go and start companies. And they start great companies. And they're able to attract their former colleagues from Google who have worked in that network before.
And ex-Facebookers are already starting companies.
Yes. Yes, the ex-Googlers become the ex-Facebookers, become the new company startup ecosystem, and we're jazzed about it.
So, you as a venture capitalist, we were speaking with Paul Kudrowski earlier, he said asking this question is kind of like a trap, but you have to be trying to find the answer anyway. What is the next Facebook? Can there be one?
The question, I think, is what is the next viral channel? Is there something that can grow that quickly and amass that amount of people? And that's a phenomenon that really is very, very rare. So if there's a channel to do it, I think it'll be on mobile. Where it comes from, it could come from New York, it could come from India, it could come from anywhere in the globe, but you know that it's ultimately going to be built in Silicon Valley.
What about this question? Who is the next Mark Zuckerberg?
Beats me. Again.
But you're looking for
We're
him
always
or
looking.
her.
We're always looking. And the great thing is that that person can come from any walk of life. They can come from any educational background. But again, we know that in order to grow a company, there's something in the water, in the soil, in the education system, in the startup landscape in Silicon Valley that make this a very unique and relatively easy place to grow a company.
Is Facebook a once-in-a-lifetime company?
It certainly is a once-in-a-decade company. Of course, I said that with Google 10 years ago, so let's see if there's another one.
Can Mark Zuckerberg's success, we've talked a lot throughout this program about how he has managed to maintain such strong control over the company, how he's been able to grow his vision by taking money in unconventional ways. Can his success ever be replicated?
He is a force of nature. And when you look at the massive companies coming out of Silicon Valley, they've all been headed by forces of nature. And it's easy to look at Steve Jobs and Sergey and Larry from Google and think the exact same thing. You're going to need to have somebody who has the creativity, but in a way has the ego and narcissistic tendencies to be able to want to grow something in their own style. And it's a unique person that does that, and it's always somebody as a venture capitalist we're looking to fund.
It also is going to change the landscape of venture capital. I mean, look, Excel was on the way down before they invested in Facebook, and now they're on top. Do you see the dynamics, the venture capital rankings changing dramatically as they have in the last decade?
Absolutely. Once you fund a successful company, particularly one as successful as Facebook, or we've seen recently with Groupon or some of the other IPOs that have happened, entrepreneurs of similar type, maybe you start the next social networking in mobile or start the next social networking for commerce, they will come to the person that funded Facebook to begin with. So it's absolutely a magnet.
The search for the next Mark Zuckerberg, the search for the next Facebook. We will see where they end up. Maha Ibrahim of Canaan Partners, thanks so much for joining us. And that wraps up our special coverage for now of Facebook's IPO. From San Francisco, I'll send it back to Betty Liu in New York. Betty?
Emily, thank you. And coming up after this break, we're going to put the numbers to the test. Is Facebook worth more than $100 billion? And at the top of the hour, our in-depth look at the life of the Facebook founder in Game Changers, Mark Zuckerberg. Join me in the morning for In the Loop at 8 a.m. Eastern Time for the countdown to the start of Facebook trading. And the whole Bloomberg West team will be back with complete coverage tomorrow night. It will be a big day tomorrow. Don't miss it. Good night, and we'll see you tomorrow.